Hello traders, Gary Wagner here. It is 11:55 in Honolulu, 5:55 in New York on Wednesday, 26th day of October 2022, and this is the daily report for gold and silver. Traders, gold did have respectable gains. Basis the most active. December's contract is currently fixed at $1,668.80. That's a net gain of 0.65%, as I said, about $11. But that's on the surface, because if you realize that gold was up by 0.65, and then we look at dollar weakness today, which was well over 1%, actually almost 1.2%, in other words, double the move that we saw in gold, you must realize the following fact, and that is all of today's gains were dollar weakness related, and more than that, there were actually sellers in the market. To illustrate that point, I've just put up the Kitco Gold Index. This was taken about an hour ago, but spot is still priced roughly at the same price. There might be a differential of about 60 cents. The total net change on the day was $11.90 net gain on the day. But when you look at the components, dollar weakness contributed a gain of $17.20, and participation by market participants selling into gold actually took away $5.30 of the $17.20 gain, which is how we came to a $12 gain in spot gold. We also saw about a 20-cent gain in silver, with the most active December contract currently fixed at $19.54.5. Low today, $19.18. But as we saw in gold, if you take away dollar weakness, because dollar weakness contributed approximately 20 cents of the gain in spot gold, you actually saw a decline of about 4 cents, and spot silver was up about 16 cents on the day. So we're seeing the same thing in gold and silver, and that is dollar weakness being the total component of today's net change. As I said during the price board, the most important component in net changes daily of gold has been dollar strength or weakness. Of course, the dollar has been on a tear, an absolute tear, since the beginning of 2022, when the dollar was trading at about 94.5, up to the highs that it achieved at the end of September, just below 115. That is why I've created a Fibonacci retracement that begins in the lows that were established mid-January to these highs that recently came in. And the high that I'm talking about, of course, is this high here, when the dollar index challenged just shy of 115. So traders, where could the dollar go to if it continues to trade under pressure? Today was significant. And the reason for that is it broke through a key Fibonacci level, the 23.6% Fib retracement at 109.95. That's the point it held last time it came under pressure from 114 and traded to lower pricing. Of course, from there, it traded to a higher low, but a high nonetheless, just shy of 114. And on this bout, it challenged and broke this key component, this critical price point. And so the next couple of areas are going to be based on recent history. The first area where it could find potential support should the dollar keep falling is 109.23, and that is simply based upon this recent top here. The second area we could see gold trade to is about 107.85, and that is based upon these two lows. Below it is the 38.2% Fib retracement. That comes in at 107. If we continue to see dollar weakness, we should see gold eventually take that as a cue to have some buyers come back into the market. But we will have to wait and see how the Fed reacts, and most importantly, the two reports coming out on Thursday and Friday, with Thursday's report going through third quarter GDP, as well as the updated figures of our national debt. And then on Friday, the inflation report vis-a-vis the PCE or core inflation. So what does that mean for gold pricing? While we can acknowledge that we have seen it move up from the double bottom that occurred at $1,622, this last part of this rally has all been driven by dollar weakness, and that dollar weakness has not been accompanied by buyers entering the market. And so what we have to see on a technical basis is first a solid close above $1,680 per ounce. That has been the area of resistance we have talked about. It was former support, because if it can challenge and close above that, I don't believe that $1,700 per ounce will be an issue. If we get a rally underway, the highest I think we can see is about the 78% Fibonacci extension level that comes in just at around $1,740. We're basing that extension from 1680, the former low that came in back in approximately July, down to the double bottom when we start our Fibonacci extension. So Thursday and Friday are going to be key components. We'll have to see how these reports come out. That's tomorrow and Friday, and that will give us a much clearer indication as to where gold is going to head short and interim term. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.